So, very good afternoon, everyone. So, first and foremost, I wanted to thank each and every participants because the continuous feedbacks and the suggestions that you people are giving us continuously are motivating us to do this webinar every weekend. So, without all of that, this continuous learning wouldn't be possible. So, thanks each and every one of the participants from the entire team of Zentax. So today is the 86th week of this Zentax talks. So in this, we'll be talking about the ITC related aspects and the notice aspects relating to the ITC. So yeah, with respect to GST, it's been 8 years since the inception of GST, but there's been a lot of changes happening around GST with so many changes in the law, that is new subsections or clauses being introduced, or amendments in the sections, the changes that are being made in the portal. Right now, the GST portal has become stabilized, but still there are changes to ease the compliance for the taxpayers. Quite a number of notifications for waiver. So all of this, there has been a lot of changes happening around the GST. But out of all of this, the most complicated thing the taxpayer is facing is the handling notice part. That is, be it any notices that is relating to tax liabilities or ITCs, or with respect to e-labels or e-invoice, there has been a rise in the number of notices. So we could say the GST has become a routine part of the compliance. So yeah, so this session focuses on the ITC aspect and the notice aspect relating to ITC. So I would say the GST notice is not calling for, or it is not the allegation of wrongdoing of the taxpayers. It is the call for the clarification that they are seeking, or the explanation the department wants from us. So once we submit all of those details, or we give a proper explanation to each and every issue, there is a chance of the smooth closure of the order, and not to get the demand order. So with respect to GST, there is no chance for exception. All we could assume is the expectation that anytime a notice shall be issued. So while talking about this, I again reminded of an incident that happened a few months ago. So I thought I'll just share it with you. One of our clients, it's happened a few months ago. So one of our clients came running to us, telling the bank account got freezed, and the balance in the bank statement has gone negative to some crores of rupees. So in this stage, he was clearly panicked. The accountant has no clue what has happened, and when we checked, we came to know that there has been a lot of communication from the department, right from the. Just a minute. So yeah, sorry for the interruption. So yeah, with this client, when we checked, there has been a lot of communication from the department. So right from the DRC 01A, everything has been communicated to the communicated by the department. So DRC 01A was issued. There's no response from the client. After that, one was issued, no response. Reminder 1, reminder 2, reminder 3. Again, no response. After that, order was issued, and 3 months within once order is issued, within 3 months, either we have to pay the demand, or they have to go to the appeal. So that was also not done. So all of this time lapses expired, and the client has not responded to anything. So the department has initiated recovery. So what we could do, we filed an appeal very hurriedly with this in the condemnation period, and the appeal has been filed. After that, a few months later, they've received another notice. This time he was very clear that notice has to be, he kept on checking the notices, and it was the same set of, same pattern of notice that was issued for the previous year. Same, for the same issues for the next year was also received. And we replied to the notice. We went to the department, explained to the officials, and it was closed smoothly. So here the point is, we should be frequently checking the notices in the portal. Say if you're filing monthly returns, maybe you can frequently check what are the notices that have been issued. So in this case, the negligence for missing the notice was the major mistake that has happened from the taxpayer side. So in this also, one of the issue I wanted to particularly tell is the notice is all about the discrepancy between the e-way bill and the GST returns. And also the ineligible ITC, that is the 17.5 notice that we get, right, based on 2E. So the major portion of the demand was relating to the ineligible ITC. So once that was clearly sorted out, and once it was clearly explained to the officials, that was closed down very smoothly. So that is why I feel this session is very important, so that we could know how to handle all of these notices, or how we can make them understand that this is an eligible transaction, or if it is eligible, why the ITC is eligible. Yeah. So today we'll discuss about the ITC aspects only, because that is in itself is very vast, and maybe the further sessions will be handling the tax liability part. So with respect to ITC, we'll just touch upon the basics, that is section 16 and the section 17, that talks about the eligibility and the apportionment and the logged credits. So before going on to explain the ITC part, I'll just give you the recent updates about the GST. So the very recent updates, all of the people filing monthly returns be very well aware of it. From the July 25, the GSTR 3B has become non-editable because of the auto population rules. Because already we know the fields in GST 3B are getting auto populated from the GSTR 1 and GSTR 2B. But now the liability part that is getting auto populated from 1 remains unedited. That is the amount that is getting auto populated from the 1, we cannot edit that amount. So basically, if you want to change the demand part, if you want to change the liability in the GSTR 1, you have to file the GSTR 1A. That is, this GSTR 1A has to be filed after the due date of, after the filing of GSTR 1 and before filing of 3B. So if you want to change any of the invoices that is already reported in GSTR 1, that could be done through GSTR 1A, and that will be reflecting in 3B. And so we can file the correct amount in the 3B as well. So this is with respect to non-editable fields of 3B. Another important change is the 3-year time limit has been introduced. That is, the GST returns of the past period can be filed only up to 3 years. Say, suppose if I want to file now the April 22 returns, I'll not be able to file now because the 3-year time period has expired, because 3 years from the due date of the original return has to be taken into consideration. So once 3 years has expired, you'll not be able to find the GST returns. And then other important changes is with respect to e-way bill portal, that is 2.0 has been launched. That is, it has become fully interoperable. That is, we have two e-way bill portal, that is e-way bill portal 1 and e-way bill portal 2. So in the existing one, everything is not very interoperable. That is, the crisscrossing function has been enabled. Say, for example, if you have generated e-way bill in the e-way bill portal 1, now you want to extend the validity of the e-way bill. When you check in the e-way bill portal 1, the server is very low, and you are not able to extend the validity in the e-way bill portal 1. You can very well do it in the e-way bill portal 2. When you will check in the e-way bill portal 2, all of the details we have generated in the e-way bill portal 1 will be available in the portal 2. This is called the crisscross function. That is, you can edit the e-way bills that is generated in either of the portal. I can extend the validity, you can update the part B, and you can update the transporter details. So everything has become interoperable with the e-waybill portal. Please do keep in mind that it is very well interoperable. It is being newly launched facility. This should be really helpful for the business people. The next is with regarding to 128 waiver. So most of us would have filed the waiver under section 128A in SPL forms, that is SPL 01 and SPL 02, for which you would have got you would have received the SPL 03 from the department. After that, the waiver would either have been accepted or would have been rejected. If the waiver is rejected and SPL 07 is issued, you can very well file an appeal against the waiver rejection. That filing is enabled in the GST portal. So same as we filed the appeal for the original demand order, you can file the appeal for SPL 07. All is you have to go to the application part, and you'll have to choose the waiver application, waiver order, and you can file an appeal against the SPL 07. In this, one point that we should be trying to understand is, even though if we have filed appeal against SPL 07, and if that appeal is also rejected, which means the waiver is completely rejected, still the original appeal that you have filed for the original order still holds good. So this has to be kept in mind as well. So whenever the waiver is rejected, we have an option to what to do next. So we have to be just cautious about that and do the next step. And the next is the very recent changes. All of us would have received the WhatsApp messages or the flash news that has been hiding all over the news channels. That is, the center is proposing to change the GST rate. That is, they are planning to bring only the 5% and 18% slab, and one more 40% slab for the luxury and sim goods. As of now, the ministry has given a nod to it, and it is pending with the GST Council to give the approval. So once the council gives approval, there will be a lot of changes in the GST rates. There are a lot of changes in the insurance, healthcare, with respect to automobile industry, and so on. So we'll have to wait and see what are the changes that is being happening. So these are the updates I thought I'll just share with you, which is useful from the taxpayer perspective. So moving on to the ITC part, the two sections that is very important regarding ITC is section 16 and the section 17. So section 16 talks about the eligibility and the conditions for availing the input tax credit. So as we all know, section 16(2) prescribes the conditions that has to be fulfilled for the availment of ITC. But if we see the section 16 subsection 1, and particularly if we see the first part, it specifically tells every registered person. So it is like an open clause. When you read the first part, it will be like every registered person shall avail ITC. So whenever the taxpayer is registered, subject to such conditions and restrictions, if it is intended or used in the course or furtherance of the business, ITC is available. This is section 16 subsection 1. Here, what we have to look into it very carefully is it has to be used in the course or furtherance of the business, and whatever the amount that we avail in the ITC, I mean in the GST or 3B gets auto-populated, gets credited to the electronic credit ledger, and that becomes our electronic credit ledger balance. So the table 4C from the electronic credit ledger, that is 4A minus 4B, that is reversal, net is 4C, and that will be credited to the electronic credit ledger, and that is our ITC balance. So going on with 16 subsection 2, so it starts with the non-obstantive clause. It tells notwithstanding anything contained in this section. So whatever the conditions are prescribed in this section 16 subsection 2, it has to be definitely followed. If any one of this condition is not satisfied, then you are not eligible to avail the ITC. So the first and foremost condition in this 16 subsection 2 is the possession of tax invoice. So with respect to tax invoice, it can be either in soft copy or it can be the hard copy as well. But one thing we have to look at very carefully is the e-invoice. Say if I am the customer and my supplier is supplying the goods to me, and the supplier turnover is already crossed 5 crores, we have to check if e-invoice is being issued, e-invoice is being generated by the supplier. So we'll have to be very careful about this, because once e-invoice is applicable, the normal invoice, that is the invoice other than the e-invoice, is not even considered an invoice. We Some of us would have seeing notices telling that you have crossed the limit for e-invoice, you've registered in the e-invoice portal, and so invoice is applicable. The invoices that you've generated is not valid. So the department might go on to tell that your supplier is e-invoice registered, but he has not raised the invoice, so you don't have the tax invoice, and hence the ITC is not eligible for you. So we have to check if the e-invoice is applicable to the supplier, and if he has generated e-invoice. So this we can check with the e-invoice portal. All you have to do is go to the e-invoice portal, and in the search button, you can see the e-invoice status of the taxpayer. In this, you can go, the next screen will be like this. You can give the GSTN and the date, and the system will retrieve the data, and you can check on that. So for our e-citizens, the portal has also given us the aggregate turnover and the date from which the invoice is being applicable. So see, you can see here for the 10 crore, the date was from 1st of October 2022, and for less than and for 5 crore, the applicable date is from 1st of April 2023. You can also check in the GSTN's generating IRN. If you click on that, you will get the list. From that also you can check. So this is with respect to possession of tax invoice. So the next most important clause, that is subclause, that is inserted very recently. So it is 16 subsection 2, clause AA and clause BA. So all of us would have been definitely aware of this, because these two clauses talks about the filing of returns by the supplier in the GSTR1 and its auto population in GSTR2. So unless and until the supplier files a return in the GSTR1 and it gets auto populated to us in R2B, we definitely cannot avail ITC. So all of us, I think every taxpayer would have received notice on this point, 3B versus 2A. Right from the financial 17-18 till now. So there has been excess availment of ITC in 3B in comparison to the 2A or 2B. So we must be very careful about it. We'll have to check if the invoice is being reflected in the GSTR 2B, and then only we should be availing the ITC. So the next condition will be the receipt of goods and services. For the receipt of goods, we can confirm with the e-way bill. So whenever there is a moment of goods, as per the law, when the e-way bill limit exceeds, that is for the interstate, if the value exceeds 50,000, and if it is within the state of Tamil Nadu, if the value exceeds 1 lakh, e-way bill has to be generated. So the receipt of goods can be checked with the e-way bill. And the next two conditions are the tax payment to the government and the 3B furnished. With regard to these two conditions also, you would have received the notice, that is the very familiar notice that is being issued by the department for the financial year 2021, 22 right now, is the ITC availed from the return defaulters, cancelled taxpayers, and nil return filers. So all of that will be covered under this. Let us see that in detail. So I've given it in the later stages of the slides, so we can discuss it at that point of time. So these are the conditions with respect to 16 subsection 2. So all of these conditions has to be satisfied for us to avail the ITC. Next would be 16. In 16, there is another section 16 subsection 3. So it talks about the ITC on the capitalization. That is, once capital goods is purchased, if you have availed depreciation on that, ITC is not eligible. That is 16.3. And 16.4 talks about the time limit. So there has been a recent amendment in 16.4 as well, and that is 16 subsection 5 has been introduced. So it tells right from that is faster 4 years from the implementation of GST, that is from the financial 17-18, 18-19, 19-20, and 2021. The due date is for availing ITCs November 2021, and for all of the years it will be the subsequent years November month. So that time limit has also to be kept in mind for the availment of ITC. So moving on to the next important aspect relating to ITC is the blocked credits. So blocked credits, all of us are very well aware what of the blocked credits, but there are some negligence from the taxpayers. Right now, all of the taxpayers are very well aware that ITC is not eligible for the motor vehicle, especially car. But some of the taxpayers unknowingly they would have availed ITC in the previous years, say for the financial year 18-19 or 19-20, and they are being receiving notices under section 74 telling the ITC on motor vehicle has to be reversed. So we have to check very well whether the ITC aware is correct or not. We have to check if it is blocked. So the first blocked credit under 17.5A is the motor vehicle. So once when the motor vehicle is purchased, we have to check the seating capacity. If it is less than or equal to 13 passengers, or if it is more than 13 passengers, we have to check if it is for the transportation of passengers or if it is for transportation of goods. So for easy reference, given this chart, so here you can see the motor vehicles, if it is owned or if it is hired, it can be split into two. That is one for transportation of goods and one for transportation of passengers. If it is for transportation of goods, the ITC is completely eligible. You can avail the ITC. If it is for transportation of passengers, you'll have to check the number of passengers seating capacity. That is, if the number of passenger seating capacity is more than 13, ITC is eligible. If it is less than 13, again, you'll have to check on for some more conditions that if it is used for further supply or if it is for transportation of passengers or if it is for imparting training or driving. If it is so, then ITC is eligible, and for all other situations, ITC is not eligible. So this is so we're quite familiar with this nowadays. So one request is if you're being a tax practitioner or a tax professional, just make sure that your clients doesn't avail ITC for the motor vehicles. If so, it is availed. Please do advise them to reverse it right now. Else, because for the because for car and all, there'll be huge amount of the ITC that would have been availed because it's 28% and all along with the cess, and that if it has to be reversed now, it has to be reversed along with the interest, which should be an equal amount of the tax part. So let's be very careful about the motor vehicles part. So next is clause B. Clause B lists some other specific conditions where the ITC is blocked. So it talks about the food and beverages, outdoor catering, beauty treatment, healthcare services, cosmetic and plastic surgery, leasing, renting of motor vehicle, except for the clause A and A, life insurance, health insurance, and membership of the club with travel benefits. But another proviso that is being inserted is if it is obligatory for an employer to provide the all of this to the employees under any law, then that is not blocked and it is available. Say for example, if there is a factory, and as per Factories Act, there has to be compulsory canteen facility. And if it is mandated by the Factories Act, the employer can avail the ITC on the canteen supplies because it is obligatory for the employer to provide it to the employees under the Factories Act. So whenever it is obligatory, the ITC is eligible. So the next is two subclauses, that is 17.5C and D, talks about the immovable property. So very recently, this has become a very debatable point. The C subclause, I mean, the clause C talks about the works contract services, whereas clause D talks about the construction service. Here it is other than plant and machinery, and for the clause D also it is other than plant and machinery. But this in clause D, the other than plant and machinery is recently amended one because it was earlier plant or machinery. Why this change has been substituted? Because it is the effect of a very famous judgment, that is Safari Retreats case, where the plant or machinery has been nullified by the department, substituting it with plant and machinery. So whenever an immovable property is, whenever there is a construction of an immovable property, either it is under works contract or it is construction, it is completely blocked, we have to keep an eye on it. But if it is plant and machinery, then that is eligible. The definition of plant and machinery is also been given in the explanation. So plant and machinery means apparatus, equipment, and machinery fixed to earth. So all of this condition, if it satisfies, then it is plant and machinery, but it excludes land or building or any other civil structure, telecommunication towers, and pipelines. So when it comes under the definition of plant and machinery, then ITC is not blocked, it is completely eligible. And if it is for the construction also, the explanation is given, because we know the construction not only includes the very new construction, all of the reconstruction, renovation, any of the alterations or repairs are also considered as construction to the extent of capitalization. The term capitalization is not defined in the GST law. So we'll have to check if the amount that has been used for the reconstruction or renovation is capitalized to the original immovable property. So the next is clause E, talks about the composition taxpayers. So as we all know, composition taxpayers cannot levy GST, and he don't get things for with a tax. So obviously he cannot avail the ITC, and so the composition taxpayers are not eligible. I mean, the tax paid will be blocked under 17(5)(b). If you are a composition taxpayer, then ITC is not eligible, it is blocked. Next is clause F. That is for a non-resident taxable person. So non-resident taxable person is a person who does not have any fixed place of business in India. He comes for a very temporary period. He undertakes transaction and he supplies goods and services. So he's called as non-resident taxable person. He is not eligible to avail the credit. There was another insertion in 17(5), that was FA. So FA talks about the corporate social responsibility. So when the goods or services which are used or intended to be used relating to the obligations under CSR activities. Suppose, say there is a company and he is liable to do the CSR activities. What are the goods and services that is received by him for doing the CSR activities? That is completely blocked and it's not eligible with effect from 1/10/2023. So if you are a company and you're doing CSR activities, please keep a check on this. Next is goods or services used for personal consumption. So this is very common. We all know if some goods is used for personal consumption, that ITC is not eligible. And suppose if it is used for both the personal and the business use, it will be allowed only to the extent of business as per the common credit rules. So in this scenario, I would talk about the section 17, subsection 1 and 2. The 17 subsection 1 talks about ITC is available only for the business purpose. If it is for any purpose other than business, then ITC is not eligible. And 17(2) talks about the common credit. That is, suppose you have a taxable person and you have both the taxable supply and the exempted supply. The ITC pertaining to the exempted supply is not eligible. I mean, that is completely blocked. You cannot avail the ITC on exempted supplies. And if so, you have some of the common credits that is used for both the taxable goods and for the exempted. Then that has to be the portion that is relating to the exempted part has to be reversed in accordance with the rule 42. We should be very well aware of this also, because we've been receiving notice in this as well. Say for an example, there is a trader who deals with coconuts. Okay, so coconuts is, it is exempted, but the copra is taxable. So if he's doing so, he would have definitely received the notice from the department telling the ITs that he is filed completely pertaining to the ratio of the exempted turnover is ineligible. So in this scenario, we'll have to check what are the common credits that he has taken, and we'll have to reverse ITC based on the rules. So let's keep check on that if you're dealing with the exempted goods. So in this, there is another example I've given. Say, suppose there's an entity and it is selling the coolers. Say there are 50 coolers. Out of the stock, one of the coolers they've used it for personal consumption. So in this case, the ITC pertaining to only the 49 coolers is eligible and one coolers it is completely ineligible. Say in another scenario, the one of the cooler is used for the personal use for 4 months, and after that it is sold at a discounted price. In this scenario, the cooler that is used to the extent of personal use, that is for 4 months, to that extent alone ITC will be ineligible, and for the balance ITC can be availed. This has to be arrived by means of Rule 42, that is the formula for the common credit. The next is if the goods are lost, stolen, destroyed, or written off, or if it is given as a gift of free samples, then ITC is not eligible. This tax paid in accordance with Section 74, you have received a notice or an order under Section 74, and you have paid tax in that up to the financial year 23-24, then it is not eligible. So these are with respect to the blocked credits. I've just touched upon it. What are the basics of the blocked credits? So if we are covered under any of the categories of blocked credits, then ITC is completely ineligible. So moving on to the next, let's look into the GST notice, that is assessment proceedings. Whenever there is assessment proceedings, there are two set of proceedings, that is SAN related proceedings and special proceedings. In SAN related proceedings, there are two, that is pre-SAN proceedings and the SAN related proceedings. The pre-SAN proceedings could be scrutiny, or the if you're selected for the audit, departmental audit or inspection, search, any of the test purchases and all. That will be covered in the pre-SAN proceedings. So once the pre-SAN proceedings are done, the next will be the SAN proceedings, that is the issuance of DRC 01A, followed by DRC 01, followed by the order. And the special proceedings is assessment for non-filers and the summary assessments. So I think all of us are familiarized with DRC 01A, 1 and DRC 06. So I'll just tell you what it is. DRC 01 is basically an intimation that is received from the department telling there are certain discrepancies. So whenever there is a notice, whenever there is an intimation issued in 1A, we have to reply in part B of 1A. After that, 1 will be issued, and for that, we'll have to reply in DRC 06. And based on the reply, DRC 07 will be issued. It can be either drop order, it can be demand order. If it is a demand order, then you will have to either pay the amount or go for an appeal within 3 months with the rate of communication of an order. So here I've just given the comparison of section 73, 74, and 74A. So let's skim through it. So 73, we all know it is relating to fraud. 74, 73 is not relating fraud. 73 is relating to fraud. 74A is a combination of both, that is applicable from the financial 24-25. Right now, the department have not started giving much of the notices for financial 24-25. So from the financial 24-25, only 74A is applicable. So let's keep a check on all of these timelines and time limit for passing of an order. So once when the order is issued or the notice is issued, let's keep a check on the validity of the notice being issued, if it is issued beyond the time period also. And the tax percentage also varies in all of it. So I'm just skipping it, and let's go to the notice part. So the first is DRC 01E. So in the recent times, that is during the second week of May and all, there was n number of notices for the financial year 21-22, with giving only the 15 days timeline to respond to the notices. So so if you see for the financial year 21-22, the due date was between the second week to the last week of May. But the same May was the due date for the financial year 2021 as well, because for the filing of a bill. Because of the financial year 2021, the due date to issue the order was February. So 3 months from the February would be May. So the May month was the flood of notices and the appeals pertaining to the financial year 21-22. So for the 21-22, if 1A was issued, then all of us would have replied in the part B of DRC 01A. Subsequently, as of now, for the taxpayers for whom the 1A is issued, now the DRC 01 is being issued. And all of us are very well aware of the format, because they keep sending this system generated notices for all of the taxpayers, I guess, because there is no taxpayer that they can say they've not received any notice from the department, because either way, at least from the very small taxpayer to the very big corporates, all of us would have received the GST notices, even for at least 3B versus 2A. So so I've given the screenshot of number of notices and the different aspects relating to the ITC part, so that we can discuss how the notice is being issued, and probably what are the remedies that we can do, or what are the strategies we can adopt to reply to these notices. So this particular thing is with respect to GSTR 9 and ITC part. Have any one of you seen this aspect? If so, it is based on table 6A and 6I, and the notices has been mentioned as excess claim of ITC. So in this scenario, what could be the reply that we could give for this such kind of scenarios? Can any one of you tell how we can respond to this, or why this difference arises in the first place? You can put it in the Q&A box. Any of the suggestions for this, please? Okay, Mr. Palninil Mahesh, he has asked to repeat the question. So I'm just asking if the notice is received for such a scenario based on GSTR 9, that is table 6A and 6I. What would be the probable cause of this difference, or how we could respond to this notice is what I'm just asking, sir. So Madam Rachita has mentioned that erroneously missed to be reported in GSTR 9. So I guess you're telling uh, it is missed to be reported in GSTR 9 means, madam, because in table 6A, the amount that is being auto-populated from the 3B, that is when we are filing GSTR 3B, the whatever ITC that we avail in table 4A would be auto-populated to the table 6A. From that, we'll have to give the bifurcation in table 6B for input how much, input service for how much, and capital goods. So in that scenario, if as per Rachita madam is telling, if we missed out to be reporting table 6B, or if there is some error, that is say some decimal error, or if there is some error in the bifurcation, or if missed reporting something, then probably the ITC could arise in 6J as well. So yeah, ma'am, whatever you have mentioned is right. So if there is any error in reporting of GSTR 9, then also that will be reflected as an excess claim of ITC. So let's be very cautious on reporting the breakup in the table 6B from the table 6A. So yeah, Mr. Samsudin and Mr. Ilahoven has said that maybe earlier year ITC would have availed in the current year. So, sir, I guess you're telling, suppose if it is for the financial year 21-22 notices received, you're telling the ITC of 2021, you're availing it in 21-22. So, even if in that case as well, I would have availed in 3B. So, that is only auto-populating in 6A. So, that breakup only I'll be giving in table 6B to 6H, which is getting auto-populated in 6I. So, that should not be a problem here. Yes, so Mr. Ramanan has rightly mentioned that 3B reversal is not considered. Yes, very rightly he has pointed out. So in this, the table 6A, the details that is given in table 4A of 3B only is getting auto-populated. That is, if we have reported some of the reversals in table 4B, that is obviously not taken up by the portal in GSTR 9. So obviously, if reversal is missed to be considered here, so the major difference, that is almost major of the taxpayers, the difference would be the reversal. So we'll have to check if there is a notice based on this 6A and 6I. We can check if we have reported any of the reversals in GSTR 3B, and if we have reported any of the reversals in table 7 of the GSTR 9. So because if there is, say, because if you have reported reversal in 4B of table 4B of GSTR 3B, but you have netted it out and then only have mentioned in GSTR 9, probably reversal wouldn't be the reason for the difference. But you have not netted it off and you have shown reversal in table 7 of GSTR 9, then probably this difference is mainly due to the reversal part. So I guess this aspect is clear. So whenever there is a notice in this aspect, so let's keep a check on all of the aspect that we have discussed. So the next part is the excess claim of ITC with respect to 2A. So this is very common aspect all of us would have faced, because as I've mentioned earlier, right from the financial year 17-18 till date, we have been receiving n number of notices based on 2A and ITC availed in 3B. So as of now, for the financial year 21-22, system generated notice looks like this. So all of us would have been aware of it. So it directly takes the ITC from the table 8A, and just it compares the ITC on available to us based on the ITC reported in 3B. So here there will be probably there are n number of reasons for this difference. The main reason could be this notice is taken directly from the GSTR 9, that is from the table 8A. We all know that the table 8A is static, like it is freezed on a certain date. So when you file the GSTR 9, it is freezed. What we can do is right now we can download the table 8A and see what is the amount. So there are chances that it is changed. You can check on the tax comparison and liability sheet, how much is the ITC available to us. And one most important thing that we could do for 2A versus 3B is the reconciliation bill wise. It is very mandatory. You'll have to do the reconciliation each in every bill wise. That is, you take the list of invoices that is reflecting in GSTR 2A. You take the list of invoices that you have availed in GSTR 3B. You take the list of it and you do the reconciliation based on either the invoice number or based on suppliers. You do, and you find out where or which supplier has not reported in GSTR 2A. You can contact them and you can get the reasons as to why they have not reported the invoices in 2A. So for the previous year and all, that is 17-18 till 18-19, 19-20, 20-21 also, we have got the circular 183 and 193 where we can give the supplier certificate and all. So for the financial 21-22, let's focus on the reconciliation part, and we can check if any of the reversals are being made, or if the supplier has not reported in the current period, or if he has reported in the later stages of period, then that would be reflecting in the table 80 right now. So we can keep a check on that. So with respect to 2A versus 3B, I think it is pretty clear. If any of you have suggestions apart from this, please put in the chat box. So let me have a look at it and we shall discuss that as well. So I just thought we'll make this notice sessions very interactive, so that we could get to know like what are the aspects that has to be checked in response to a notice that are being issued. So yeah, Mr. Surya Narayanan Ganeshan, he asked us to forward the PPT. Yes, sir. So once the session is done, we'll be sending you the PPT. You can have a look at it. Okay, let's move on to the next. Yeah, so this is, I would tell, this is one of the most crucial part in the notice that is being received for the financial year 2021 or for 21-22, I say, because the huge amount of demand comes from this ineligible ITC pertaining to section 17.5. So, the notice or intimation that is being given by the department mainly gives this list and all. So we can see the motor vehicles, electrical goods, it can be cements, paints, work contract. You can name it anything from the even the airlines travel, iron and steel, even the sanitary goods, tabs, everything is termed by the notice as ineligible ITC. So basically, this ineligible ITC part is taken from the HSN of the supplier. So whatever HSN is registered by the supplier, based on that HSN, the system is generating notices for this, telling it is ineligible. So in this scenario, we'll have to check how much is eligible for us, and if even though the notice mentions as ineligible ITC, the list of invoices are given in the notices and list of supplies are also given in the notices. So you can so the notices gives a list of supply month wise. So you can check in your books what are the goods that we have purchased from the supplier, if it is used for a regular day-to-day course of the business, or if it is used for our normal operations of the business, you should check on that. So here I've given a sample of notice that is received. So here, if you see, the major part is the major demand is for the hardware part. So suppose to say if you are dealing with foundry, all of the goods that you have purchased would fall, most of the goods that you would purchase would fall under iron and steel category. So if so, the basic raw material for the casting or founding industry would be in the iron and steel. That will be termed as ineligible ITC. So in that scenario, what we could do, we could explain to them it is basically our day-to-day operation, and it is in the normal course of the business. Probably you can substantiate them by telling the your nature of the operations, or you can produce the invoice copies, and we can explain to the officer telling it is completely eligible. For the works contractor also, it is the same. For hardware, suppose the electrical items as well. Say suppose if you are a mobile dealer, and all of the goods that you purchase is basically the mobile phones. You buy mobile phones and you sell mobile phones. So that cannot be termed as an ineligible ITC. But the system picks up the notice telling that is an ineligible ITC because that is termed as an electrical goods. So in this point, we can explain them that is basically my regular day-to-day operation of the business, and it is my business, and so it is definitely not ineligible. So with respect to 17.5, it is all about the facts that we explain to the officer. Even if it is a motor vehicle, we can check if the motor vehicle that we have purchased, if it is a commercial vehicle, if it is used for the transportation of goods. Say if you have purchased some pickup van for transportation of goods, it is definitely eligible. We can check if it is completely eligible. If it is eligible, you can submit to the department telling it is just a commercial vehicle and it is not a car or vehicle that is used for personal purposes. So for all of this ineligible ITCs that is being mentioned by the department, so it depends on us, like how we respond to the notices that is being given. So if it is mentioned in the notices ineligible ITC, it is not necessarily that that has to be ineligible for us. So all we have to do is we have to explain to them why the ITC is eligible, and if it is not eligible, we have to prove to them the ITC is not availed. So if it is not eligible and if the ITC is availed, definitely you'll have to reverse amount along with the interest. So let's keep a check on that as well. So as I mentioned earlier, the block liquidity completely comes under ineligible ITC. So that is availed even for the financial years, that is ongoing financial years. It is good now to reverse ITC because anyways you'll be getting the notices, and at that time if you're reversing it, there will be twice the amount you have to pay because along with the interest. So if you reverse now, the damage is minimal. So you can pay the ITC part. So there are a lot of questions that has been posted in the chat box. So I'll just complete this PPT and answer all of your questions, sir. So Muthukumaran sir has mentioned that there is an audio problem. Am I audible to all of you? Please put it in the chat box if it is audible or not. Yeah, so many of you have mentioned that it is audible. So I'll just continue. Muthukumaran sir, I think there should be some technical issue from your side. So please check it. I think the audio is very clear and my team has also confirmed it and you people has also confirmed it. So I'm continuing with that. So the next thing is some of us would have received this as well. So it is basically the ITC reversal part. Suppose you have reversed the ITC, you have mentioned the ITC reversal only in the GSTR 7 and you have not mentioned ITC in GSTR 3B, then you would have definitely received this. So probably the reason could be you would have found out only some of the ineligibilities during the GSTR 9 and you would have mentioned in the reversal table. And if it is so, please check that your client has paid this amount via DRC 03 because GSTR 9, there is no option of paying amount, we all know. So once it is mentioned in the reversal part, make sure that that is already paid. So reversal is as simple as that. We can check if the reversal is made correctly, and if it is not, we'll have to reverse the amount and pay it along with the interest. So next common issue that we've been receiving is this common credit. So as I've mentioned earlier, the rule 42, if we are dealing with exempted as well as taxable, there is a clear chance, there is more number of chances that you will definitely receive a notice from the department telling that you have not reversed the common credit pertaining to the exempt supplies. So in this scenarios, what we could do? If the government is, if the notice is mentioning that is to be reversed, what are the response that we can give in this issues? Please put it in the chat box. Mr. Samsudin has mentioned that we have to reverse common credit ITC portion only. Yes, sir, you're absolutely right. So whenever we receive notice for that, we can clearly respond by telling that only the common ITC has to be reversed. So the examples of common ITC would be the audit fees that we pay. So we have to check what are the common credits that is pertaining to both the taxable turnover and the exempted turnover. And only for that, if we reverse the ITC, that too pertaining to exempt supplies, that is sufficient. For that, we have to follow rule 42 and 43. We'll have to follow the rule and reverse the ITC. So we can work on that and we can reply to this issue. But please make sure that you don't avail ITC with respect to exempt supplies. Suppose if I'm dealing with vegetable products and along with that I'm doing taxable sales as well. So we have to be very sure that we don't avail ITC in relation to any exempted supplies. So that is very well clear because exempted goods, when we buy, there is no tax, and we sell, there is no tax. But then we have to prove that also to the department that we don't avail ITC pertaining to the exempted supplies and only the common credit, and that too for common credit we have reversed ITC. So that could be the proper response that we are giving for this notice. Yes, he is mentioned along with interest. Yes, sir, that has to be reversed along with the interest. So the next is with respect to imports. So if you are importing goods, I think this notice is definitely you would have, because all of the bill of entries don't get auto populated in GSTR 2E. So the probably the reason would be the bill of entries from the ice gate, it is not getting pushed to the GST 2A. So in that scenario, we'll have to check the copies of bill of entries, and we have an option in the portal to search the bill of entry. You can use that. We can give the bill of entry details with all of the dates and bill of entry number and all. So it will fetch the details. Even though if you are not receiving it, you can raise a grievance, you can raise a query in the portal as well. You can check with your customs broker why it is not reflecting in GST 2E, and probably you can reply based on that. And one important thing is for availing ITC with respect to import of service, bill of entry is sufficient. So we can explain to the officer that we do have all of the bill of entry copies, and the only thing is that is not getting in JST 2A. So it depends on the discretion of the officer as to how he is accepting this issue, because it is all in our hands to explain to the officer relating to the imports. Yeah. So the next one is the most important notice aspect, that is which is undeniable to the department people. They don't accept any of the reply that we give for this cancel list return default test. Because at the end of the day, from the department perspective, what they want is they want the tax to be paid. So if the supplier is not paying the tax, they would be questioning us to pay the tax, is what this talks about. But one of we have to check with respect to this ITC from the cancel dealers and return defaulters and non-taxpayers. It is basically the eligibility condition of section 16 subsection 2. Because if you see, the supplier has failed to file 3B and he has not paid the taxes, not paying the tax to the government. And if the supplier has filed the returns but with a nil turnover, it is not paying the tax to the government. So in both of these cases, we should be very careful, because because it is one of the conditions of section 16 subsection 2. If it is not fulfilled, then in the first place we are not eligible to avail the ITC. But then even if we have availed the ITC, then we have to check the details of the supplier. So in case of the supplier failed to file 3B, or in case of nil returns, we can check the registration status. We can check the return filing status of the taxpayer. You can check in the GST portal, we can check the return filing status of the GST 1 and 3B if they have filed. And if so, they have filed, we can you can contact the supplier as well, asking them if they have shown our bills in the GST 1 on 3B, and if they've paid the tax. So probably we could get a screenshot, or you can get the confirmation from the supplier. You can submit it to the department. And for the case of supplier who have filed 3B but with nil turnover, obviously we are at a very pity state, because whenever we are filing the returns, and for checking the ITC eligibility, we can check if the GST 1 and 3B is filed. So nowhere we have the option to check if they have filed nil returns. So in this case, the department will definitely ask us to pay. So we have to fight it with the legal basis only for the supplier who have canceled the registration and the supplier who have filed the nil turnover. So it all depends on the facts of the supplier if they have filed the 1 and 3B. Sometimes very minimal cases, there are errors in the GST portal not showing the return filing frequency properly, but it is very, very minimal. So if in that case, it can be explained with the facts that the supplier has filed the returns, but for that you need the cooperation of the supplier as well. So this point, I would say it is 50-50. It is in the hands of us, in the hands of the department as well. For the supplier registration cancelled, there are some suppliers whose registration is cancelled so moto. I mean, from the previous year, but they would have filed the returns for the particular financial year. Maybe you can check on that, and we can so yeah, I think we've made justice to I've heard almost all of the ITC related aspects that we've been receiving very recently for the financial year. ITC aspect. If you have any of the doubts relating to the ITC aspect of the notice that you have received recently, please put it in the chat box. We shall discuss it now. So Surya Narayanan sir has mentioned that please take a webinar on reversal 40 to 43 and 37. Sure, sir. We have noted. We're planning to, we'll definitely plan to take web reversals. So we've got some of the questions. I will take up some of the questions. So Mr. Prabhakaran has asked, business travel air also ineligible, ma'am. As we have seen, the air tickets, that is the flight tickets that we have booked, also comes under the ineligible in the notice. So if we could explain that it is for a business purpose or if it is for an official trip, then that could be termed eligible. But again, we'll have to prove to the satisfaction of the department officer that it is for the business purpose. So Mr. Ravichandran has asked a question if two-wheeler ITC is eligible. Sir, it definitely comes under the blocked credit. So the two-wheeler that we purchase and the car that we use for personal consumption is definitely covered under the blocked vehicle. I mean, blocked ITC. So Mr. Balaji has asked a question that ready-made dress franchise business can avail ITC for the furniture fittings and electrical appliances and fittings. So if it is along with the immovable property, then it is then that will be covered under the blocked credits, because that is the part of the immovable property. So we have to check on the facts of the case in detail as to how the fittings or electrical fittings are made, and then we'll have to decide if it is blocked or if it is eligible. So Mr. Arul has asked when the GST 3B ITC 4A is will go block editable. So sir, as of now, the 3B locking is for a tax liability. So the auto probability details from GSTR 1 in the GSTR 3B is uneditable. I mean, non-editable. You cannot edit that. So Mr. Balaji has asked for sales commission only available from garments company via rising invoice. Sir, can you please explain the question? I'm unable to get your question actually. So Madam Rachita has asked if the supplier refuses to file the return and we have claimed the GST, what is our resolution? We pay GST twice, once at the time of invoice and second at the time of assessment. How to deal with the suppliers not filing the GST returns and their compliance? Ma'am, we've already discussed this. This is basically from the point of the department. So from the department, the tax is not paid to the department. Like we have paid the tax to the supplier, but then the supplier has not paid tax to the department. So the department catch hold of us to pay the tax. And more so, the eligibility condition is not fulfilled, telling the tax is paid. So in this case, we have no option but to pay the amount to the department. Either you can recover it from the supplier, but then you'll have to pay it to the department actually. Mr. Suryanarayan sir, thank you so much, sir. You've mentioned that thank you for the continuous support for the GST stakeholders by the webinar. So it is definitely because of the support that you people give us and the feedback that you always give us. So if you want us to take any of the topics, please do ping us in our mail ID to the mobile number that is mentioned in the screen. And you have already mentioned that please take webinar on reversals. We would definitely consider taking that, sir. Okay, I think we are done with the questions. So thank you so much for the continued support. So we'll have the webinar every weekends. So please let us know if you have any of the feedback. Please write to us. Thank you so much. Thank you from the team of Zendax.